Morning, guys. Morning, everybody. I feel like I'm really close to the screen today, to the camera. Let's jump over to our charts. So, welcome in, everybody. Happy Wednesday. Welcome in, Steve, Audio, Frederick, Jonah, Kenneth, James, Express. Welcome in, Apri. Welcome in, Michael. Good morning, guys. You're gonna test. Someone's gonna test the call. We'll take a look at Tesla today. I think you're in a little bit of trouble. I think you're in some trouble. But we'll talk about it. We'll go over the levels today, and we'll discuss what's going on. Yeah, we had some ADP data come out this morning, and the market's responding to that ADP data. So that's going to be a big discussion point for us today. And you are seeing some supply rejections coming in the market, right? You're seeing some larger time frame supply coming in on the market, and this is going to be a main focal point of today's session. DJP Priceless, thank you so much. That's very nice of you. DJ Priceless, thank you. Very, very nice of you. That is very kind of you. Thank you, DJ. Welcome in, everybody. Welcome in, welcome in. How is everybody doing? Slow week, right? Definitely has been a slow week. I don't know if it's been slow for anybody else, but market's been consolidated, right? Market's been in this really tight bound range yesterday. Didn't even take a trade yesterday. No trade, just nothing, right? There was a little end of day scalp that was potential, right? But nothing of real seriousness yesterday. And I think the reason why is the market is very much so bound up right now. It's bound up before earnings. It's bound up before major economic data. And we're going to talk about what would sort of unbound the market, what would get us to see some more free-flowing moves. If we're having trouble recently in the market, it's not really your fault. It's just the market's not moving, right? The market has been in a very tight range on the 4-hour time frame, on the 1-hour time frame, and it's difficult to trade in these tight ranges. Yep, awesome, guys. Welcome in. So I think we're going to get started. We have about 700 people here in the morning. We're missing some people. People are a little bit late to the party today, but it's okay. You guys are all here, so that's all that matters. So let's dive into it. Today's session, we're going to talk about SPY. We're going to talk about the downside that's coming in the pre-market session. We're going to talk about the major 549 level, which is that demand below from yesterday's session. Do we lose 549? If so, we see downside back in the 545. 545 is the level. If we break 545, then I think things become really interesting for downside, and we can see a pretty free-flowing move back down to 5400 ES. So this is going to be a main discussion point of today's session is do we break this level? Because if we do, this is that level that we can see that more of a free-flowing waterfall downside move back in 5400 ES, which again is 535 SPY. So that's what we're going to talk. That's what we'll be focusing on today is this 545, and I think a lot of the market is going to depend on what we do with 545. It's yesterday's lows. It's the Friday low area. It's a big, not quite yesterday's lows, but rather our Monday's lows, which I think is important to sort of know, right? Our Monday's lows being at 545. So we'll talk about that today. We'll go over the ES chart. We'll talk about ES. Same levels basically, right? We have that 5530 level. We have our Monday's lows at 5500 ES, and then below 5500 ES, you have downside back in at 5400, right? Do we finally get out of the range? And it doesn't mean downside. This could be a nice downside play today if the market does break under these lows here. So that's what we'll be talking about today's session. On the Qs, it's actually just simply 468, right? 468, 467. Do we break below it? If we do, that's where we see some more downside and free-flowing moves back into 462. So this is what we're talking about today. So major supply coming in here at the 475. Does the market give us a move now? We're going to go over NVIDIA downside. Does NVIDIA up? And it already broke. Okay, NVIDIA broke under my 106 level now. 106, 106, 106. The little head and shoulders, right? If you're a head and shoulders trader, you're probably going crazy right now. I mean, I would say this is probably a little bit of deformed head and shoulders, but I mean, it's there, right? I see it. And we've now just lost under that 106. In my opinion, under 106, we have some free-flowing downside move. So we'll talk about that today in NVIDIA. Do we see NVIDIA downside today? Okay. We're also going to talk about AMD. AMD supplier rejections still coming in, right? Guys, do you remember the supply again and again and again and again? Supply in AMD, and it still is very much so the case. Let's talk about AMD today. We'll talk about the trend play. We'll talk about the 94 level. We'll talk about 97. 94 and 97 being the two technical spots to watch today. Apple 208. Apple 208, keep 207.50. Keep this on the back burner today. It was a little bit of a level from Monday session and the Wednesday high, Tuesday, Wednesday high. We're going to talk about that level today. Do we break under 207.50? If so, excuse me. Allergies are still going crazy. Everyone, I'm sure many of you guys are probably the same. The spring allergies always get me. But anyway, 207.50, we'll talk about that today. 207.50. Express, you're crazy, man. That is very kind of you. That is very, very kind of you. Everybody give Express a little bit of a thumbs up. That's very, very nice of you. Absolutely did not have to do that, but I will do something with that. Thank you so much. Very kind of you. We'll talk about the 207.50 today. This is a big level today. We're going to go over what it means and what we can see for a potential downside on this chart. Okay. We're also going to go over Tesla. We'll talk about Tesla 290 upside or 280 downside. It's in a tight range. Does the market break range? That's what we're talking about today on the Tesla chart. Amazon 190. We'll go over Microsoft. Microsoft also has earnings coming up in the after-hour session, so I want to talk about Microsoft pre-earnings, and then we'll talk about Microsoft post-earnings tomorrow session. Okay, so let's dive into our economic data and our charts, economic data and earnings reports. Then we'll go back to our charts. So today's session, Wednesday, April 30th. In this morning session, we are responding to GDP data. GDP data and ADP employment report has come out, and the market is responding to that. We also are filled with other economic data throughout the session. We have 9:45 data at 9:45, Chicago PMI. We have 10 o'clock data, personal income and outlays, PCE. We have pending home sales at 10 o'clock as well. And we have a petroleum stats report at 10:30. So this session is the second biggest session of the week in terms of economic data. We have huge data today: GDP, ADP, employment cost index, Chicago PMI, and PCE. Yesterday's session and Monday's session was very range bound. There was no exciting candles. Everything was tightly bound. Today's session may be a day where we start to see the channel break. Because of all this data, this could be a reason or a catalyst for the market to move. Tomorrow's session, also the same idea. Now, tomorrow's session is also interesting too. Tomorrow and today and tomorrow are interesting. Why? Because we have end of month and beginning of month. Funds love to move money around end of month and beginning of month. Obviously, also end of quarter, start of quarter. But this may also be an interesting day as well because it's April 30th. It's the last trading day of April. So expect some market reaction, expect some market volatility today after being contracted for 3 days in a row. I think either today or tomorrow we'll see that range break. So we have to be ready for it. Okay. On the earnings docket going into our session ahead of us. Earnings docket, you guys must be aware we have Microsoft, Meta, Robinhood, QCOM all after hours today. Yesterday we had Starbucks. Major failure in Starbucks. Starbucks is reporting consumer spending slowdown. This is not good for the economy. This is not good for the market. It's forecasting other retail sector names and consumer discretionary spending to go down, and that will impact other names that we probably see going forward. Their forecasts were grim, and their sales are grim, and that's what's causing Starbucks to sell off. Snapchat also selling off because of the advertising stuff with Trump, and we're seeing some selling in advertising, which in turn will probably affect Meta. So Meta, this Snap earnings is kind of foreshadowing what's going to happen to Meta. Let's see what happens to Meta in the after-hour session today. But again, Microsoft, Meta, Robinhood, QCOM reporting in the after-hour session. Let's see how the market reacts. Okay. Also, obviously Thursday, you guys know Thursday big. We have Amazon, Apple, Riot, Airbnb, Reddit. Okay. So let's move on. I want to spend time talking about our charts. We have 1,000 people in here. We have 1,000 people here, and we have 288 likes. That means we're at 28% like to view ratio, which is pretty bad. Guys, get the likes up, please, if you guys can. Let's get to 500 likes. If you're not subscribed, also subscribe because I make content sometimes, but also very rarely. But subscribe because it does also help the algorithm. Okay. So on the SPY chart, right? On the SPY chart, you are seeing a potential shift, right, in momentum, right? And the momentum the past few weeks in a row has been upside, right? We've seen upside, base, rally, upside, base, rally. And now you're beginning to see some supply rejections come in off of a major level. And we know that if there's one level to have in our charts, we know it's still that 550. 550 being a massive level. Remember the lows, the highs, and the highs, and the highs. And if you just take a second, right? Just take a second. And you know what we'll do? We'll go to ES first. I want to just talk about ES for a second. Go to ES first, and let's just go to the 4-hour time frame. and add one level to your chart. Just remove everything just so you get a clean and clear picture of what's going on here. Draw this one level right here, right? You're gonna see what I'm talking about. It's the 50, what is this? 5590, right? You can see over here, 5590 supply to this other dotted line supply. You can see around 55, or whatever, like 5565, right? And you can very clearly see this is the problem area. This is a problematic zone, right? Just go through and see what I'm talking about, right? You can see exactly, we'll do a draw box over here as well. You can see all the consolidation, the consolidation, the consolidation, the consolidation. That's important over here, but even more so important is if you shift this whole box over for a second, right? Shift the whole box over and see what's happening over here on the ES chart. This, to me, is a really interesting flip in the market, right? Look at what's happening here. You have a series of lows and highs turning into, yet again, another low here. If there's going to be anywhere where the market finds it a resistance, we knew it was here. We've been talking about this level for a long time, but there was a chance of us breaking it, and there still is a chance of us breaking it, right? If we do break and hold above 55.91, that's where we get the upside free-flowing move. That's where we see some nice upside back into these highs and probably back into these highs as well. But if the market does fail here, you look at this like a bear flag in the market, right? Well, then you could probably see a pullback back to our 5,400 ES, maybe even back to the 5,000 ES level. That's where I'd expect the market to pull back to. Why? Because again, if we do reject here, which we already are now, and we begin to not only reject but break down under these lows, then the free-flowing downside move comes in. And what I said there is really important. If we reject, but then not only reject off the level, but if we begin to lose these lows and start seeing a flip in the trend, then we'll see the downside move. It's not enough just to be rejecting, right? Because again, every breakout in history has a rejection at some point and then it eventually breaks out. This still is holding, right? It looks weak in the pre-market, but it still is holding. But what would change the market is if we break back under our 5480 level on ES's chart or on SPY, and we'll jump down to SPY chart. I'm going to add back my levels here. But on the SPY chart, right? On the SPY chart, yes, we're seeing supply rejections coming here at 5500 off that ES supply zone and off that major 4-hour resistance, right? You can see the major 4-hour resistance, same level on ES's chart. But what needs to happen is we need to see us break under 545. Because if we just do this, we see a little excitement downside move today, and we get bought up off the 545 again, then we have simply not done anything because we are still within the Monday high range and the Monday low range. And if we are trading within Monday's highs and lows, we are not doing anything. The market simply is still range bound. And there was a moment yesterday where we got excited and the market broke above the Monday's highs, but it came right back to reality and fell back under the level. Today's session is just the same. Pre-market downside's coming in, but let's not get excited, right? Yes, I see the larger time frame idea. Yes, I see the supply. Yes, I see the daily supply. Yes, I see the supply in the ES chart. But are we below 545 on the SPY level? No, we're not, right? We have seen supply rejections come in many times before, and we get bought up right at 545. What needs to happen is we need to break under the 545. Then the free-flowing move should come in my opinion, because then at that moment, we've broken trend, we've broken structure, and now we can look for the series of lows to come in back into the lower 530s. And I think if we do break 545, I would argue that we should likely move back into 535 at a bare minimum, which is the ES level, 5400 ES. Okay, so that's the longer term picture. I want you guys to understand it. I want to go over ES now. Obviously, we kind of went over this already, but the idea is still very much so the same, right? You can see we have supply above us. This whole area is supply. This whole area is just a big supply, right? We've been trading in supply for so long. If you've had a hard time trading this market the past 2 days, it's not because you're a bad trader. It's because what are you doing, right? What's going on? What has the market really done the past few days? It just has stayed within the Monday highs and the Monday lows. It's just stayed in this sort of consolidation phase, and the market's done nothing. The market needs to break above 55.78, which it did for a little bit yesterday, but then faded, right? But if we can break above 55.78, that's where upside comes in. Or if we break under 5,500 ES, under 5,500 ES, which again, we may see it today, but this has to happen in order for us to see the free-flowing downside move back into 5,400. That's what I think is a contingency for the market to move today. Okay. On the QQQ chart, on the Q's chart, and I want to go over this in 2 minutes because again we are a little bit late today. The QQQ level is 466, right? You can see 466, 467. That's where our demand is stepped in previously. You can see 466, 466, 466. If we lose 466, we move back into the next level here, which is around 462.50, which again is that Wednesday high, that break at level from Wednesday. That's the next demand below. Is if we see this happen, we should move back into 462.50. Under 462.50, I think we see a move back down to 450 to 453, which is the next big level here in the Qs. If we do see a breakout today, it's got to be above 475. Again, Monday's highs, Monday's lows. That I think should be what everyone's watching today. Are we within the Monday session? If we are within Monday session, just don't take a trade, right? Or if you are taking a trade, take it on light size because we're still bound up. Even right now, at this very moment, we are still bound up in the market. The market could easily do this today. Wham. And we're going to be sitting here doing nothing because the market, yet again, is still maintaining range. That's the level today, and it's all we have to watch today. It's 466 on the QQQ, okay? Let's move on, guys. 850. We have 1,100 people in here this morning. The market's cooked. Yes, the market is definitely getting cooked, but we must get cooked. We must see move under 545 for the cooking to continue, okay? That I think is what we should all understand about today's session, okay? NVIDIA. So, NVIDIA, downside, right? NVIDIA, in my opinion, I think this looks good for downside. Why? Because we are now under 106, right? The consolidation was there. We consolidated for a while. We look strong. I think we even longed this on last week here. We longed it last week there. Where did we long it? Somewhere here we longed it last week off 106. And then now, to me, this looks like a structure breaking. This looks like an upward structure failing. The reason why I say that is because if you draw a structure from the Monday, April 21st lows to where we're at the peak of our yesterday's session of Tuesday, April 29, you're going to see that we not only saw a break in structure, but we came back and tested the structure high here at 110. We couldn't break above 110. This was the long factor. If you can get above 110, that's where things can go long side. But it couldn't do it. It didn't break above it. And we are now seeing a shift in structure and a break under 106. So what does this mean today's session? It means if we're under 106, look for shorts, right? If we can see a little bit of a pop and fade today, that's probably your best trade, right? Obviously, if it reclaims 106, this is where things become long side again. You can look for longs of 106, longs of 110. But as of right now, your sentiment should be primarily bearish, in my opinion, right? As long as we're under 106, this is a structure break, a structure break, a structure break. We can look for a pop and a fade to happen today, back into 106 for shorts. And we should expect this to go back down to the 100 level, which is the next big level of demand. So that's what I'm watching today's session is a 106 retest failure. Okay, on the AMD chart, there has not been a more clear level here. We knew this day in and day out was do not long AMD as long as we're under 98, right? 98 supply, 98 supply, 98 supply, 98 supply. Now, I can't say I traded AMD. I can't say I traded AMD puts, but do I have sirens going off? I do not have any sirens going off. It might be on your side, man. Do you guys hear sirens? On my end? Maybe there's sirens? I don't know. Potentially. I wouldn't be surprised, but I don't think I heard anything. Anyway, under it's probably on his end. It's probably on his end. So under 94, you guys are scaring me. I'm like, oh, what's going on? Under 94, we should see downside back into 90, which is kind of what we're already seeing. The same thing on NVIDIA is what I'd watch, right? I would watch to see if we can set up a short opportunity somewhere back at the supply zone today. I'd watch to see if 94 we could see a little bit of a pullback, like a little bit of a pop and fade retest. This is what I'd watch. I would really watch 94 to 95, right? I would look to see if this can fail today, right? The supply. If we can do this today, if we can pop into 94, 95, look to see if this retest fails. If it does, that's your short opportunity today, right? I think at this point, we're not going to test 98 anymore. If the market's going to fail, this won't happen. We're just going to see a structure lower. So look to see if we can structure lower off the 94, 95. Again, that's these lows here. It's the Monday's lows, right? Look to see if we can fail off the Monday's lows. If we can fail off Monday's lows, that's your short today. That's it. If the market reclaims 94, this just rips into 198. And that, in my opinion, is, again, possibly another short. but you want to be cautious now of shorting back into resistance so many times. So I'd say the only real short that I'm watching today is 94.95. That's really it, right? Because if it's going to go, it's going to go now. If it does this and reclaims, that, in my opinion, is actually a long opportunity, right? And we should see a long back at 98 and potentially above that, right? So if you're going to trade AMD today, you're trading off of 94.95, above it bullish, below it bearish. Okay, pretty simple chart here on the AMD. Okay, let's move on. Let's go over SMH. SMH, I mean, back at the major demand, right? 204, 205, major demand here in SMH. This has not failed yet. I'll be interested to see if the market does fail this level. SMH fails 204, 205. If it does fail, you can see chips begin to flip and the market sells more aggressively, right? Avgo is still back at demand here though, right? Even though a lot of these other chips look bearish, Avgo actually maintaining pretty well here, and Avgo should not be shorted unless it's below 186.5. It has to break below this demand. If it breaks below this demand, that's where downside goes in. But if we still maintain here, this could yet again be another long opportunity off that daily 200 SMA. Because remember, this level right now here on the Avgo chart is simply just that daily 200 SMA, right? So do not be short back into this level. I think you have to wait for it to break for shorts here in Avgo, but continue to watch to see if it holds that level as well for long side plays. Okay, let's move on, guys. Let's go over Amazon. Amazon. Looks like we're already having camera issues. That's exciting. But on the Amazon chart, watch the 182. 182 demand below. You're seeing it's just going to go in and out. It's not a big deal, guys. What I could do is I could possibly reset it, and it may work, or I should just leave it. I think it's fine. I think it's just going to go in a larger view, which is okay. We'll leave it alone. You guys see my my Pellegrino bottle on the floor. That's okay. All right, so let's move on. On the Amazon chart, watch 180 today. 180 is your level. If we pull back to 180, don't be short back into 180. If you're going to trade anything on Amazon, you're doing this. You're either going to look for pullback longs here 180, or you're going to look for a break and retest above 190. That's it. For me, Amazon's still mostly a bull side chart. The reason why it's a bull side chart is because we're above 180. Pretty simple here on Amazon, right? Amazon 180 is still major technical demand. And as long as we are above 180, look for longs, right? 180 holding, still long side play. Above 190, even better long side play, right? Look for charts that are holding well and look for charts that are not holding so well. This chart is still maintaining trend, and in my opinion, 180 is still a long spot today. So do not be short back into the Amazon level. Okay. So moving on, Apple. Apple chart, Apple under 207.5, right? You have a really nice trend here in Apple, right? That is beginning to flip. And you can see the flip on the Apple chart. Under 207.5 is where things become spicy, right? And I think we can see a pretty spicy move back under this 207.5. 207.5, 207.5, 207.5, 207.5. If we can break under 207.5, downside, back into 200. That's what I'd watch out for today's session, under 207.5. This is actually one of my top watches for shorts today, right? This is the first time we're seeing a nice trend break. It's already broken. It's already starting to break it this morning. I hope it doesn't do it before pre-market or before market opens. But this is what I'd watch today, is watch for a nice little break and retest under these lows, right? You can see Wednesday high, Thursday high, Monday high, Monday low, and now we are testing it this morning right here at 207.50. If it breaks here, look for a short side play back at 200. If it holds here at 207.50, right, do not be short it, right? The only contingency the only thing we can do here is short it back under this level. If that happens, then we can look for shorts back into here. And that's what I watched today here on this Apple chart. Okay, let's move on. Let's go over Netflix. I don't know what to do here, right? To me, if I don't know what to do, I don't say anything, right? I think that actually, you know what? This is what we do, right? You look for the 1065, right? You don't trade this until it pulls back to here. If that happens, this is still a long opportunity, just like Amazon, right? Long opportunity, all-time highs turning into support. Look to see if we can pull back long here on Netflix 1064, 1060. This still would be a long opportunity, right? By no means is this a short play yet until it's back under 1064, okay? That should be what you're watching. So watch to see if it pulls back to there for longs. If it does, that's what you're looking for long time plays. Okay, so let's move on. Let's go over Disney. DIS. Disney reports earnings tomorrow, so no intention of really trading this today. But if you are trading it today, you should probably go to a a doctor, right? Because there is nothing to do here. Let's move on. Let's go over to Google. Google also reporting. I think Google reported last week. Yeah, it did. Reported last week. Google. 1 hour time frame. I mean, 161. Okay, 161 is your level. Above it, bullish. Below bearish. That's your level. Okay, that's your inflection point. Above 161 upside, back in 172. But under 161, which you are pre-market, we could see and probably do see the downside move back in 147. Okay, so again, nothing crazy here. Tesla. We almost forgot Tesla, but we didn't. So that's all that matters. Tesla's chart. Tesla under 280, right? Under 280, Tesla goes back into the dead zone. Remember the dead zone. This is the dead zone. The dead zone is between 270 and 281, 280, okay? If we break under 280, which we have low day yesterday, Tuesday. This is a low of day, Tuesday. Under 280, we go back into the dead zone, back into 270. If we break above 290, it's a long side play, right? So if you're trading Tesla today, you're either doing this. Above the longs, above the highs yesterday for a long side trade for 290, breakout back into 300, or below 280 for a downside move into the dead zone back into 270, and I would expect possibly lower in the market, right? So that's what all I would do here in Tesla. This is the dead zone. This is the graveyard, right? And you do not want to be in the dead zone, because if you go into the dead zone, you're going to lose money here, because look at what happens every time you go into the dead zone. It's just choppy. It's not great, besides this session, which actually was quite nice, but here was pretty choppy and consolidated. And if we go back into the dead zone under 280, it's probably going to be the same thing. I would expect downside though under 280. So if you're watching shorts, under 280 for puts. Okay. On the Robinhood chart, Hood. On the Robinhood chart, daily time frame. I mean, this is still a bullish chart by all means, right? I was just looking at Robinhood yesterday for long term. For me, it's all about 50, right? If you can get a break and hold above these highs and these highs and these highs, you should see upside. So watch to see if that can happen. That could be a long side play, break and retest the daily time frame. So watch the 50 level. The only thing to watch here though is 50, right? If it's rejecting off 50, which it is right now, I wouldn't trade it. I would leave it alone, right? 50 is your level. Below it, I think this goes lower, back into almost 45. So that's what I'd expect here on this chart is if we fail 50, which we are now, we probably see this fade back into the lower 45s, right? Into 45, that's the next level, right? That's probably a long opportunity there, or above 50 is another long opportunity. Okay, so that's all we're doing here on the Hood chart. Okay, let's move on, guys. Let's go over Starbucks. Starbucks, obviously bad earnings. We spoke about this in the pre-market about 20 minutes ago. Starbucks failing, right? Not only because it's failing supply here 85, but also because it is failing after a pretty bad earnings report. You're going to see a miss in both their revenue and a miss in terms of their earnings, almost a 16% miss in earnings. But that's not what's important. What's important is that they are showing us how consumers are spending money, right? And you'll see some reports on it. I'm sure you'll see some reports on it. But consumers are spending less money at these luxury places, right? And discretionary spending is the first thing to go when the economy begins to shift. And that's what you're seeing, quarterly global sales dropping, okay? So that's what's happening here on the Starbucks. Okay, PLTR, Palantir 110, right? 110. That's your first pullback long, but for me, it's not really the most beautiful. I think if I'm watching Palantir, I'm watching 104, right? Watch 104. That's my main focus for long side trades. 104 is my main focus. 110, a little bit of a flimsy level. If you want to be crazy, you want to be aggressive, you can watch 110 for a long side. But for me, I would watch 104 as your main long spot, right? 104 and even 99 as your big long spot areas. That's what we spoke about yesterday. We spoke about these levels yesterday's session, and it's still the same today, okay? So let's go over one last ticker, guys. One last ticker. Let's pick a good one. Let's go over Microsoft. If this was not a good one, we will go over one more. But I think earnings tomorrow, right? Earnings tomorrow. Earnings in the after hour session tomorrow. I mean, it all comes back down to 396, right? This is a really clear inflection point. You can see 396, 396, 396, 396. This is the supply, though. It's just like SPY, right? If it can break above this level, upside back into 406 and potentially beyond that. But for now, we're still back at big supply. You can see supply. Do not be long here in the 396.50, right? This is still a big area for potential rejections to come in, okay? Guys, the market is here. The market has been choppy. It's been consolidated. It's been ranged. And today's session, even though we're seeing some pre-market downside, it is still within range until we break below 545, right? We are under 550, but we still need to break 545 for some more free-flowing downside move, right? And the range is simply still Monday's highs and Monday's lows. If we're stuck within this channel, the market still remains choppy. Okay, so let's see what happens today. Let's remain optimistic, but I'll see you guys all for live trading. Happy and safe trading today. Bye, guys.